All right, good afternoon, everybody. Event Trader here. Just going to do a quick look through the upcoming markets and what we can be expecting. Scott's going to be jumping in and taking a look at some of the earnings with me. Few names continue to trickle out here, so definitely some potential trading opportunities that we're going to want to take a look at. And of course, the overall market activity here as that remains really in focus. It's been a big Fed week so far, and that's been good for the markets as there's a general thought from the central banks around the world that we need a little bit of more easing given some of the global economic backdrop that we've seen, certainly the trade wars that were in place. But I would say, taking a look at that Fed Beige Book summary, posted it at 1404 onto the site. Didn't strike me as a Fed that was planning on cutting in 2 weeks' time here. We're going to get an updated look at their economic projections when that comes out in 2 weeks. Certainly expecting to see that reined in a little bit, as well as some inflation as well. So going to be curious to see how the market takes that. But I'd be really surprised at this point if we're going to see any sort of a rate cut in June. Based around the outlook or the commentary that I was seeing, the economic activity expanding at a modest pace overall from April through mid-May, still expanding, so it's not contracting. Don't think that's enough to get them to move. And the comment that the outlook for the coming months was solidly positive but modest, again, strikes me more as a patient Fed than a Fed that as we heard today with Kaplan, that was looking for some weakness before moving on. And then finally, firms generally reported input cost increases in the modest to moderate range. So a little bit of inflation there. And again, weak inflation was probably a key reason for them to move, and we're just simply not seeing that. So I wouldn't be expecting a June move by any stretch. Based around this commentary, we'll see what happens with economic data over the next 2 weeks. And with that in mind, let's jump in and take a look. We're going to start off on the international side here first, and it's a number of big central bank activity going on, starting first and foremost with the ECB. They will have at 7:45 their latest announcement. They're not expected to move rates at all, but they are expected to provide the terms for their TLTROs. I'll post expectations in my day ahead comment so people have that in line, but they're really going to have to be pretty aggressive with this term in order to impress the markets, and we'll get a little bit more detail on that at 8:30 a.m. tomorrow morning when Mario Draghi takes to the airwaves with his conference around with his press conference around this meeting. That'll certainly be garnering a lot of attention. But before Mr. Draghi gets up to the mic, we're going to have Bank of Japan's Hiroki Kuroda speaking at 4:25 a.m. and the Bank of England's Mark Carney speaking at 5 a.m. So as you can see, a lot of Fed speak going on from around the globe, and that could be enough to keep us afloat here in the overnight session. In addition to that Fed speak, relatively slow, but we got Germany factory orders at 2 a.m. Expected to see a plus 0.1% month-over-month increase. And then we got a revision to the Eurozone GDP number. The preliminary number, if you recall, came in at plus 0.4% on a quarter-over-quarter basis. And then we got a French 10-year bond auction and a Canada trade balance as well, just to clear out the day. So looking at the U.S. macro, we got pretty busy session right around that 8:30 a.m. period with claims coming in, the April trade balance, a revision in Q1 productivity, and a revision to the Q1 unit labor costs. Collectively, I still don't see this being a major impact. Perhaps if we saw claims come in well above expectations, but trade balance, briefing.com consensus at a deficit of 51 billion. I don't know if that's going to really change all that much, or really change perception out there. And again, this is a revision to Q1 productivity and unit labor costs. Not expecting, both are expected to come down a little bit, so perhaps a slight negative, but not expecting anything major there. Perhaps if claims all of a sudden pick dip. That would be of interest. The ADP data, obviously, fresh on people's minds here. We're also going to have the Challenger job cuts number too, so I'll probably throw that in and the number for that as well, just to kind of keep an eye out on things. And then later on in the morning at 10:30, we're going to get the latest nat gas inventories. I know commodity traders been busy in the UGAS position, so something for us to keep an eye out on there. And then at 1 p.m., the Fed's John Williams is going to speak. I think we heard from him earlier this week. Not really looking for any more Fed commentary to impact things at this juncture. So we'll continue to monitor the macro here, and of course keeping an eye out on trade headlines. I'm just watching around for that. I just seen some headlines from Mexico that could be hitting the markets a little bit here. We've got, and this is coming from sources. We saw a quick dip on it, but saying that Mexico will demand that the U.S. stops flow of weapons and ammunition and criminal cartels, will not accept safe third country status that requires Central American asylum claimants. So I've seen a few rebuttals from Mexico here that I think caused a brief dip to the markets, but we're right back up towards the session highs. So keeping an eye out on that. All right. So we are going to move ahead and take a look at some of these earnings coming up, and I'm going to be joined by Scott here as well momentarily. So just wait for him to pop on, and we'll be right back.
I am popping on, Gavin.
All right, there we go. There we go. So Scott, just taking a look. We heard your comments earlier, but you got anything to add here before we break into some of these earnings?
No, it just like I stated earlier, this market, we had a strong turnaround Tuesday, I guess you can call it, or trend day up Tuesday yesterday, coming off of a pretty poor start to June on Monday. But the market this morning, we opened up higher, and anybody that got long yesterday in hopes of a bounce here the last 2 days, they got what they wanted, and they immediately took profits off the opening. Anybody who was bearish in this environment saw this morning's opening in context of the multi-week downtrend as a gift to get short some. So I see it as a win-win. If you were bullish overnight, you got paid, and if you got short this morning, you got paid. Now, but beyond that, let's see, S&P came down to the 2,800 mark and attracted some bids there. So that is notable that buyers are willing to defend a key psychological level in the market there, and they've been managing to hold on to that here throughout the day. The only caveat that I throw in there that I think is throwing a little bit of a monkey wrench in my overall analysis is that small caps are lagging. I still have the advanced decline line and the up-down volume ratios in negative territory, despite the fact that we have the Dow up 185 points, Nasdaq's up 40, S&P's up 20. Mid caps are also positive, and they're all trading near their session highs, but mid caps and small caps are lagging. So that's a little bit of in the back of my head analysis that's throwing me for a loop here and keeping me still in that mindset that the market's got a ways to go to prove itself to us that there's that the bottom might be in, or whether we're going to rally higher. There are definitely pockets of strength out there. Uber, we saw take out its IPO range highs from last month at that 45 level. We have Lyft also capturing some bids as well on the heels of Big Brother Uber. And then Roku, just a monster gain today on an upgrade, busting out over that $100 mark. This has just been a leader in the market here over the last couple of weeks, just phenomenal gains there. A couple of these software leaders just also accelerating to the upside. Shopify's up over $18. We have new highs in Vive. We have new highs in Okta. We have just a really strong price action there. TTD, another one that was up huge yesterday in response to the breakdowns in Google and Facebook. TTD supposedly is the beneficiary of that, getting some nice follow-through to the upside there, up to new high territory. So there's definitely places that are money-making opportunities. You just got to not buck those trends. It's pretty obvious what trends are in play there and what sectors are hot and what are not. And as long as you don't fight the trend, you pretty much should position yourself on the right side of these trades.
All right. So with that in mind, we're going to start taking a look at some of these earnings that are going to be coming out after hours and tomorrow morning, and a lot of these cloud names, Scott, that are coming out. And first up, we got Cloudera, CLDR is the ticker here. I got the chart up right now, and as we can see on that monthly basis, this is one that's just been in decline, and a pretty steady decline at that. A lot of execution risk that's been involved, similar to what we were seeing with Pivotal. And for me, that's always a cause for concern. One that I'm not really interested on from a valuation standpoint. You're starting to see a lot of these cloud names just really taking a task, and a lot of people talking about value. And from my perspective, we're starting to see a little bit of a hurting out of some of the winners and losers that could be expected. I mean, we saw a lot of this during the internet bubble, Scott, where not every cloud company, just because they're a cloud company, is going to make it. And a lot of that's going to have to come to the execution. So perhaps a surprise quarter could get me a little bit more interested here, but until we start seeing better results, this is a name that I wouldn't be jumping into myself. 267 million float and 5% short, so not a big short squeeze candidate either here.
Yeah, you know me, Gavin. If I hear somebody say there's value in a stock, the first thing that comes to my mind is that this stock is in a massive multi-month downtrend, and Cloudera fits the bill there. So that's basically a trap in my mind. I try to avoid situations like that. I'm not trying to pick bottoms in my analysis. And this one's trading at fresh 52-week lows. Nope, actually multi-year lows. There's better candidates out there. I'm not putting my money behind a guess. If I want to guess, I'm going to the casinos. So there's better trades out there. I don't like the chart.
Yeah, here's a chart that one of the stronger looking ones that was performing well. It's getting a little bit heavier though at this point. That's Elastic. ESTC is the ticker. It's one that I've been following. We posted a nice earnings preview here at 11:50 for anybody looking for a little bit more detail on it. It's going to be reporting their Q4 results. This is a company that's had some nice beat raises, and that's, I think, something that's going to be needed here in order for it to maintain above this 80 level. So one to keep an eye out on here, and one of the better names in the space, but it is one of the richer valuations out there also.
Yeah, this fits into my IPO theory on stocks where if they're consolidating and trading above their initial debut range, this one made its debut back in October of 2018, consolidated sideways for about a 10-point range, and then started making its way higher here in Q1. So still holding on to those gains above $80. It seems like there's support there the last couple of months. So that's going to be your line in the sand, $80 if you like the name. So if it stays above it, I'm bullish. If it just starts dropping below it, you could be looking at some sort of corrective action below 75.
All right. Next up, we're going to stick with the cloud space before we jump over to some retailers. MongoDB, MDB. I posted the preview for this myself earlier. Another one. This is going to be its 6th quarter reporting, and they have posted a beat and raise in every quarter here. So just another one of those strong names that is out there. They got that Atlas product that they launched, which is basically a database as a service in the cloud system. So a lot of nice platform that's been really well received out in the markets. It's now up to 32% of the revenues, and where that's paying off for MDB is we saw their revenue increase from 61% year over year in Q3 to 84% year over year in Q4. This, if it meets current expectations, that would be a 72% increase. So I guess there's going to be some talk of a little bit of a deceleration, perhaps, if they come in line. They've beaten every quarter, though, so we'll want to see where that rev growth comes and the guidance, if there's enough positive action out there for them to provide some upside guidance. But this stock's just been kind of bouncing around in that 125 to 150 level, seen a run up in front of this in anticipation of a solid round of results. So certainly want to keep an eye on, certainly one that's going to be pretty volatile, but, more than anything, needs to beat, needs to raise, and needs to have that revenue growth come in close to that 85%, in my opinion, in order to break above the 150 level. And just real quick, Scott, let me get back to the float and short interest. Float, 36.8 million, short interest, 17%.
Phenomenal chart. It's massive uptrend. Take a look at the monthly time frame over the last year and a half. We've been highlighting this one since pretty much since that IPO breakout in early 2018. It's been on the emerging growth list. I think it's shown up on the liquid momentum focus list leaders list at some point over the last year. Name we talk about on our trading service all the time. I kick myself for not trading it enough on the site. It's just phenomenal. I'm not going to argue with this trend. It's a super strong stock. I suspect it just continues to go higher.
Yeah, and just kind of bears out what you've been saying in terms of hold with trends that are working, because this is one that I owned at 80, sold it at 95 thinking I was the bomb, and here it is doubled from where that was. So
monthly trends don't lie.
Yeah. Okay.
That's where the big money's at. The big money's on the monthly time frames.
Yeah, but don't you need a little bit more of a history on the monthly trends than this one would?
Nah, look down on this one. Look at that. Look at the monthly time frame. I'll take 20 months. 20 months of straight up activity.
Yeah, I mean, it just seems like a short time frame on a monthly too.
All you need is 2. You need 2 months to make a trend.
2 months. That's all you need on the monthly chart. Yeah, I mean it is vertical, right? So, okay. So let's take a look at
speed round here. Yeah,
at 5 below. Yeah, we'll go through a speed round on these retailers. Obviously, nobody's loving them, but they are loving these whatchamacallit, the dollar stores and stuff. So we'll see if they love the $5 stores just as much as we got 5 below reporting. Obviously keeping an eye on margins and such. But anything sticking out to you on this chart here, Scott?
No, not particularly. It's been really strong over the last couple of years and whatnot. You do have the 200-day moving averages coming as potential support around 120 vicinity, which is going to line up with those March, April lows. So that's going to be a line in the sand to watch going forward. I will say this, though. The more people throw out that recession potential out there with the inverted yield curve and whatnot, typically you're going to find 5 below, Dollar General, Dollar Tree, and Walmart as and even Target to some extent as your safety plays, assuming that the consumer is going to be shopping at these cheaper discount mega stores.
Okay, and real quick, Scott, SFIX, I know you hate the business model. Obviously, it's got to hold above this 22 level in order for it to have a chance. Got to keep an eye out on those customer numbers because that's where they need to show growth.
Okay. Yeah, no opinion on it. I don't like the company.
Okay, and then finally, Signet, real quick. Another one that is not showing a lot of promise at all. It's been in a pretty steady decline here. So you got any thoughts on Signet Jewelers?
Oh, Signet, I didn't know the symbol. SIG?
SIG.
Tiffany's is probably the better play because it's more of a luxury retailer and they tend to hold up the wealthy. Usually, even if they're wealthy or hard hit during recession times, they still like to go buy their extravagant jewelry, whereas these, I hate to call Signet cheaper considering they're like Zales and Jared and K Jewelers and whatnot, but the chart just looks way worse, and they got something to prove there.
Okay. Well, with that, Scott, we got the bell, and we'll keep an eye out on some of these plays as they come out, but we're going to jump off and take a look at some of these earnings right now.
Yeah, as for tomorrow,